Wait! Yeah, you, the one who clicks off in the first 5 seconds. Sit! Stay. Good viewer. Okay, ladies and gentlemen. Oh, no, just gentlemen. 4 months ago, a guy who didn't really know what he was doing uploaded a supply and demand guide. 4 months later, he thought, how can I get more views? Wait, no, that's not the script. He thought, how about I make a part 2 so I can fix some of the things I said and share what I've learned? There will be many of these videos, rather than one super long one. That way I can really milk the crap out of this content. That's weird, another typo. I know, stop talking and get to the point. If you've watched my videos, you know that I love to talk about how everyone overcomplicates stuff. So, let's take a look at this chart I borrowed from the internet, and make some adjustments to what I said. Okay. Everyone agrees that the top of a supply zone is just the most recent high. Of course. But there's a reason that the secret mindset says the bottom of the zone should be the open of the last bullish candle. Pure Financial Academy says it should be 50 to 75% of the bearish candle that exits the zone. And Fractal Flow says that, and I quote, it depends on each individual market situation. You may be thinking, is it because maybe these guys don't actually trade, they only teach, and all three of them sell some form of a course, book, or both? Hey, you said it, not me. Don't yell at me, I was just trying to read your thoughts. Anyways, Carmine Rosado, which I have heard only good things about, doesn't really have a set rule on the bottom of a supply zone or top of a demand zone either. Out of all 4 of these popular trading channels, Carmine seems to be the most credible person to listen to, since he actually trades. How much he trades, who knows. I'm sure he makes quite a bit of money on his course, but people say it's good, so there's nothing fundamentally wrong with doing that, even if you could learn all of it for free. So, we have the most popular and trusted trading channels all telling us different things. Hey, how dare you say maybe it's because they make their money through selling education and they don't actually know how to trade, besides Carmine. I'm here to learn with you, so here's the best way I can help. Wait, how'd that slide get in there? That's not right. I would say that your best bet at correctly predicting reversals based on using supply and demand zones is that you need to be watching the chart when these zones form. You have to actually see how fast and aggressively it left a price area. If it leaves a demand zone super fast, then you can tell that there was a major imbalance, so maybe when it comes back to that area, it will go back up again. But when you go back in time on 15-minute candles to search for zones, remember that 15 minutes worth of a story is being hidden by one candle. All we see is the entry, exit, low, and high of a candle. We have no idea what kind of story is being hidden during that time. Maybe it went down and stayed at the bottom for 13 minutes, and then in the final 2 minutes it shot way up. Or maybe it went in and just slowly crawled up the whole time, making it appear like there was a lot of demand there. I'm sharing this example because it demonstrates that 2 identical looking candles can form from very different movements. Why am I talking about the downfall of using large time frame candles? Good question. I don't know. Just kept typing and here we are. Oh, right. In the old video, I repeated what was taught to me from YouTubers about how institutional traders and banks aren't looking at the smaller time frames, so we shouldn't be looking at them either if we want to trade like the big dogs. Well, that's just a straight up dumb thing to say. Look at this. The white drawing represents 15 minutes of price action, and the green candle is what it would look like. Now, obviously that shows a crazy imbalance where demand exceeded supply and it shot up. But guess what? Would this candle represent an exit from a demand zone? No, of course not. Yet this price action would result in the exact same candle. I copied and pasted it. So, 2 identical candles can represent a completely different story. Not using shorter time frames because that's not what institutional traders do is dumb. And my name is Isaac and I'm a stock marketaholic. Wait, wrong meeting. Look at this picture of a supply zone from Carmine Rosado's video called How to Draw Supply and Demand Zones. I have more faith in Carmine than I have in most other YouTubers, to be honest about supply and demand trading, but, I mean, come on. What in the world determined where to draw the bottom of that zone? Do you think it was drawn like that before this candle poked up and went back down? Or do you think that this zone was drawn after this had already happened? Because, through listening to Carmine and to every other YouTuber who has covered this topic, none of them say anything in any of their videos that would logically lead me, or you to use their knowledge to draw this zone here. Using notes that I took from them, and even being extra generous with how far down the zone is, the price never comes all the way back up into this area. The point I'm trying to make is that you can't just say that market context determines the size of the zone in order to justify extending its size to anything you want. I don't think I can stress the importance of that sentence enough, so I'm going to try and elaborate on that a little. The market is complicated, and so is supply and demand trading. Someone selling a course on a trading system is going to do their best to show it working as many times as possible. Hold on though, because this doesn't mean that the person is doing it on purpose. I have absolutely no reason to believe that Carmine is not a good person, but he's also human, and he has a personal stake in demonstrating the validity of this system. Part of his livelihood depends on the reputation of these zones being valid. Perhaps his course explains why starting the bottom of the zone way farther down than what he says to do makes sense. I, however, have only learned from his and from many other YouTube videos, so this zone doesn't make sense to me. My zone makes sense based on what I have watched, and I was even a little generous with it. How about this? When the base starts forming here, draw what you think is a line of best fit, and then you can think of price in terms of mean reversion. We see the price is consolidating, which hints that it's going to make a decision of either leaving this area up or down. Since it's been downtrending, we can have a down bias. Now look at this support level. I'm not talking about a magical line that makes price bounce, I'm just talking about a line where 99% of the price action is above it. And many times it has gotten close to it and went the other way. Of course, the price breaking this level with confidence could have resulted in it just going right back up. But often it's because selling pressure has finally won. For now. To me, thinking of price action in terms of what is actually happening instead of moving down a supply zone's bottom level until it fits what we want it to happen makes more sense. I don't want to discourage everybody from this trading system by pointing out the flaws in the fact that the biggest YouTubers don't agree on how to do it, but it's also important that we have realistic expectations. When I first got into this and I went back on a chart and was amazed at how it worked almost every time, I wasn't thinking about how the chart had already happened, and my brain was making it seem as if what happened was easily predictable. That's just a cognitive bias, and it was kicking me in the butt, or my brain I guess, pretty hard. Anybody can look at a chart and draw zones to show how easy something is, but actually drawing these zones during live trading is completely different, because we haven't seen what happens yet. For my personal experience of my unfortunately very limited time sim trading, timing a reversal using zones is way more difficult than these videos make it seem. I'm saying this because I have nothing to gain from pretending that it's a perfect system, and I don't make money off of courses or trade alerts. In the next video I do of this, I'll share some of the good comments with questions, because if one person was confused, then that means that there are probably many more people wondering the same things. Now let's get to resting/leftover orders and stop hunting. If you've seen my videos, you know I take a pretty critical stance on this topic. First of all, you can see resting orders at price levels if you pay to get that access. Second of all, this is how market players trick people into taking the wrong trades by canceling the orders at the last second and making price move the opposite way. It gives some people an edge, but it doesn't help others. I've often referred to supply and demand zones being caused by leftover orders from big positions as a bunch of bull shark and various other words that come after bull. I will continue to say that this is not what's happening until someone can explain how I am wrong using actual evidence. To me, it makes much more sense to take a trade twice because the value still remains, instead of putting in one ginormous order and just leaving it there to see what happens when price comes back. If the purpose of a trade is to move the market up, and if your leftover orders aren't big enough to do it again, then why would you leave your orders there? Maybe I'm just dumb. Who knows? If I'm wrong, and if a supply zone is going to make the price go down again because of leftover orders, then why have I gotten comments from people saying to have the stop loss a little bit further above the top of a supply zone? If the zone is broken, then that means there are no more leftover orders to make the price go down again. So, either I'm wrong about supply and demand being more about the price still having the same value as before, rather than it being about leftover orders, or the concept of stop hunting with supply and demand doesn't make any sense. They cannot coexist, because the logic that builds their conceptual foundations is hypocritical and it invalidates each other. Sorry, had to bring out the big words for that one. In Carmine's video, he says unfilled buy and sell orders. He is saying that these leftover orders will make it go up again. Literally, and I mean literally, in the first picture that he uses, the wick of this candle breaks the bottom of this demand zone. What? If, according to him, the leftover orders are what make the price go back up from a demand zone, then why is there a picture here of the price breaking the zone? That would mean that all of the buy orders have been absorbed. Am I missing something here? This is so contradictory to me that I'm struggling to find the words to express the magnitude of my confusion. Maybe him using this example was just a mistake, because that's the only way this situation makes sense. Am I missing something here? Who knows? I certainly don't. I'm trying to figure it out so I can share it with you and save you some time. If a book had this many plot holes, it would be a bad book, and I would be suspicious of anyone saying it was a good book. Yet, I don't see anyone talking about this stuff with supply and demand trading. Most of what I see is good people who are trying to learn, which makes them susceptible to false information because they are putting their trust in people like Carmine, The Secret Mindset, the other channels, and even me, who believed in them. It's hard to criticize a trading system when the answer is, you just didn't read the market context correctly. If a system truly works as easily as someone says it does, then you should be able to program it. Otherwise, I'm not convinced that the successful traders who do this are more dependent on their price action reading skills through many hours of experience rather than a red or green rectangle that promises new traders an easy way to make money. If you want to, if you turn that little bell thingy on, you'll get a notification when I upload. Hopefully I didn't obliterate your hopes about supply and demand trading, but I would rather be honest and share what I've learned. I use them as references rather than trading systems. It's not the holy grail of trading, but it can be useful to use as warning signs for when you're trading based on price action and you're approaching one of these possible zones. If you want more information about predicting pivot points, I've done some of my best learning by watching all of Day Trader Next Door's videos. He doesn't ask me to mention him. I mention him because he's an absolute wizard at trading and he's great to learn from. I'll see you there in the comments. Just try to take it easy with the questions unless you've already tried to figure out the answer yourself by watching all of his videos. He's a busy guy with a family, but he does his best to get back to everyone. He's not like me who lives for the thrill of seeing a YouTube notification. I'm just kidding. Or am I? Bye-bye now. Sit. Stay. Good viewer.